cannot lead solely from a desk in the office. You must get out there and see the battlefield, step on the turf, engage all parties, keep lessons learned, and apply those lessons learned.
Welcome to Rise and Stride, where we empower you to take your next step in an ever-changing business landscape. Here's your host, Denise LeDuc-Fremming, President and CEO of the California Society of CPAs.
Hello, and welcome to another episode of Rise and Stride. With me today is James Andrus, Interim Managing Investment Director, Board Governance and Sustainability for CalPERS, California Public Employees Retirement System. In his position, James is responsible for developing and executing for CalPERS sustainable investment strategy across its $500 billion portfolio. Prior to his current position, James had been investment manager for CalPERS, and before that was corporate and investment managing partner and corporate lawyer with K&L Gates, an adjunct law professor at the Seattle University of Law, and an associate at law firm Mayer Brown. James also serves on the Securities and Exchange Commission Investor Advisory Committee, the Public Company Accounting Oversight Board Investor Advisory Group, Financial Accounting Standards Advisory Council, and the International Financial Reporting Standards Advisory Council. Impressive list of volunteer opportunities, James. You must be very busy.
Yes, I am, and I love it.
Great. I love being busy too. Keeps me out of trouble sometimes. So thank you so much, James, for being with us today. You have such an impressive background, and I'm very much looking forward to talking with you and you sharing the perspectives and insights that you have.
Thank you, Denise. Thank you for inviting me.
So I guess we can jump right in and get started. And maybe to start out, for some of our listeners that aren't familiar with CalPERS, maybe you can talk about a little on your mission, your focus, and what's top of mind for you.
I think it's important to point out that CalPERS is the largest defined benefit public pension plan in the country, based in Sacramento. Our vision is to be a respected partner providing a sustainable retirement system and healthcare program for those who serve California. We have roughly 3,000 employers. Those include the state of California, public agencies, school districts, and charter schools. Our mission is to deliver retirement and healthcare benefits to members and their beneficiaries. Our vision is to provide a sustainable retirement system and healthcare program, again, for those who serve California. Today, CalPERS delivers retirement and healthcare benefits to more than 2 million members with annual benefit payments of approximately $27 billion. Our motivation is to address climate change and ensure that we can sustain our mission. For every dollar paid out, 60 cents comes from investment returns with a funding ratio of 72% and a target rate of return of 6.8%. We must seize the opportunities and control for the risks that are presented by ESG in our portfolio.
Those are impressive numbers. 2 million, you said 2 million members, right? That you have currently.
Yes, that is correct. 2 million beneficiaries.
Oh, that's a lot of people counting on you, right? and as far as also the 60% of that portfolio, comes from really the investment income that you achieve.
Correct. The other amounts are provided by the employees themselves and the employers.
Very impressive. So just a question too on how you just started out. In your career, you started on the law side, and then now you're with CalPERS. So what attracted you to this position and to the role?
So my career in law touched on finances substantially, so the transition was somewhat seamless. While practicing law, I assisted institutional investors investing in alternative investments. Those are private equity, venture, hedge, and real asset funds. I also served managers forming their own funds, primarily in the hedge fund space. And I served on the board of the Northwest Hedge Fund Society, which later became the Seattle Alternative Investment Association. And so basically, when you looked at my LinkedIn and pulled out the keywords, it fit well with a finance background, and a headhunter found me practicing law. Initially, I was reluctant, arguing that, look, I'm not an MBA, but I looked into the skill sets of people in corporate governance and found that most of the writings were in fact done by lawyers, and gained comfort in that way. And I do believe that my legal skills support what I do very well.
Mm-hmm. That brings up a really important point that I talk to a lot of young professionals about as well. Sometimes I think when you're young, you think there's more of a straight line to a career, and you look for step 1, step 2, step 3. But as you just said, many times it's really the skills and the competencies that you amass as you're going through your career that helps lead you to positions or roles that you never really thought would be in your future.
I think you're absolutely right. I think while doing one thing, you can develop an expertise in something else, and the market can dictate that expertise is actually more highly valued. So I think it's directly right. I mean, some people do follow a straight line, but I think more often than not, it's kind of a jagged path to somewhere, and hopefully it's somewhere where you find yourself and you find a passion for what you're doing.
Mm-hmm. It sounds like you have a passion when I hear you talk. You have a passion for what you do, which is important.
Yes, I do. Thank you.
I know just this much, a little about investments, enough to do damage, I guess you could say. But it's your background to me just fits quite well with what you're doing, especially on the alternative side and just everything it's extremely important. So just another question, given the times we're in and just listening to, we're going to have continued rate hikes and inflationary times, how do you stay on top of managing this $500 billion portfolio, knowing that the investment returns are so critical to the overall growth of the portfolio? So what's top of mind for you?
So I think first off, you have to be focused daily, and got to put together a great team and focus on training and getting better constantly. Our board of administration adopted some investment beliefs that guide our process, and I think these remain true when we make any investment decision. It's important to acknowledge that liabilities influence the asset structure. That means our liabilities, our responsibilities to our beneficiaries is the primary item. A long-term horizon is a responsibility and an advantage. We're not focused on the next quarter or the next year. We're focused on being able to make payments to our beneficiaries, quite frankly, for the next 100 years. Investment decisions may reflect wider stakeholder views. So we listen to our stakeholders. And this is incredibly important when we get to talking about ESG, and more specifically what I do in sustainability. Long-term value creation requires effective management of 3 forms of capital: financial, physical, and human. I think some in the market focus too much on financial capital and not enough on the other 2, the physical and the human capital. And when we're looking at the long term, all 3 are important. We must articulate investment goals and have performance measures and ensure clear accountability for their execution. As always, strategic asset allocation is the dominant determinant of portfolio risk and return. That remains true in all markets. We will take risk when we have a strong belief we will be rewarded for that risk. And then in what we do, costs matter. And it's important to realize that risk is multifaceted. And finally, strong processes and teamwork are critically important.
You said a lot there, a lot of important key takeaways there.
And so what can I boil that down to? If I'm telling somebody, it's like, first, work with experts. Diversify, diversify, diversify. Strategic asset allocation, even for individuals, is key. I mean, you may want to go beyond that 60-40 mix and get an age-appropriate mix of stocks and bonds or other sorts of assets within the portfolio. You have to understand your risk tolerance, especially if you're looking at the markets day to day to day. The long term is what's important. Your money needs to be there when you need it, and you have to tolerate some volatility on a daily. And then I think what's most important is be consistent, is develop an investment philosophy and be consistent with that philosophy. Those who constantly change their philosophies are normal chasers, which means you're not changing the philosophy in time that it will make a difference. You see something happen in the market and you make a change exactly at the wrong time. Mm-hmm. So it's important to have an investment philosophy and be consistent.
Mm-hmm. Yeah, I think it's hard sometimes because people get anxious and so they go in and they want to change, and it's probably the worst time to change because, like you said, it's always after the fact or they're chasing something. And so they make the wrong decision.
That's exactly right.
So, James, in a lot of the conversations that I'm having with CEOs of other associations, we've been talking about kind of what you did, looking at kind of those three elements: financial, physical, human, the ESG. And we've been having discussions regarding how do we make sure that our portfolios are within those funds that are socially responsible, sustainable funds. And first, so what are you seeing as far as that? And then secondly, are you seeing returns? Because I've heard a number of different conversations that, yes, the returns for being responsibly invested are the same as other returns, right? So it isn't like you're taking a hit anymore if you do invest in socially responsible funds. Is that true?
So I think that's definitely the case, especially when you look long term. I think it's interesting. I think high performing organizations do many things well, including, addressing and adopting ESG principles and providing the information necessary. And so you will get returns from those types of organizations that are, in fact, responsive to investors and those investors' needs. Over the long term, we do see basically better performance when markets are good, and the best companies are not subjected to downturns as much as well. So overall, you see better performance over the long term. I think when we look at our sustainable investments program, we help our investment office deliver returns through the identification, analysis, and management of high valuable, sustainable investment risks and opportunities. And so it's not a matter of saying everything in the bucket matters. It's a matter of identifying what matters and getting companies within our portfolio to focus on the things that matter, especially when we're talking, again, long term. And we do this in a number of ways. First, through research to understand how a topic may affect our investments, through engagement with companies and managers to understand, mitigate, and manage ESG risks and opportunities, through our advocacy efforts with government bodies and standard setters on topics that can affect our returns. And this goes to getting companies to provide us with the information to conduct this analysis. I think it's interesting that I think many people think companies have to provide a whole lot of information to investors, and the reality is the exact opposite. Very little information is actually provided through normal processes, and investors who want specific information have to work quite hard to get it. And then the final item is integration of ESG risks and opportunity considerations into the actual investment decision making. And investment decision making is just not buying and selling securities or deciding to hold securities. It also involves voting decisions, deciding whether to engage with companies. And on the far end, it may in fact involve deciding whether or not to sue a company. So there are a number of investment type decisions that are made based upon the information that we're in fact focused on. And then our sustainable investments program is a total fund resource. We work to address short, long-term risks and opportunities that impact our overall returns. We work across all asset classes to provide centralized leadership and strategy related to sustainable investment topics. And our members rely on our investments to sustainably deliver financial results to support their promised retirement and health benefits, not just for today, but for decades to come.
Mm-hmm. It's all in the long term. I've heard you say that a couple of times. So it really is that long term, long game, that horizon that you're looking at, and making sure that's always your focus.
Yes.
So, we've been hearing a lot as far as ESG, some of the standards that are coming into play from the CPA perspective, and knowing that it's definitely an area where we do attestation, auditing on financial side. So it makes sense on some of this other, on the ESG side as well. Just from a fiduciary responsibility, can you just, provide maybe that business case or what your thoughts are as far as, the CPA's role in all of this?
The CPAs have a central role in providing assurance, but it runs much deeper than that. CPAs must be involved in the entire process, basically assisting in creating the standards, assuring that reporting is in line with the standard, creating the standards that will test whether the reports are in fact aligned, testing the assurance itself, training companies on the standards. They are involved with internal controls and reporting. So CPAs have a critical role, and it's interesting. I do not think we get there without the support of the CPAs. In the 1990s, when management discussion and analysis was originally introduced, some investors sought that those too would be assured. Interestingly enough, the accounting industry pushed back on that, arguing that the technical nature of their work did not fit well with what investors were asking them to do. I think only if the accounting profession aligns with what investors are in fact asking can we get to where we need to be. So I think there are some fundamental things that CPAs can in fact do, and it involves actually training, learning more about ESG, becoming experts on these particular items, and more so understanding what investors' needs happen to be in delivering, on that for investors. And so I think CPAs have a critical role. And on assurance itself, I think getting assurance from a CPA provides some instant credibility. Mm-hmm. It does not get you all the way there. I think there's a need to have some certain expertise in what is actually being assured. But the credibility of that CPA designation is in fact significant, and it's something that investors do in fact trust.
Mm-hmm. And we've been having a number of those conversations. Exactly what you're talking about is how do we get, as CalCPA, how do we help the CPAs get some of that additional information or understanding of the ESG space? What does it look like, and how can we bridge that gap? Because it isn't there within the curriculum right now. There is a CPA evolution that will help bring additional skills and competencies forward. But just exactly to your point, how do we bridge that gap so there is more understanding as far as the ESG?
So I think we have to quickly work on bridging that gap to bring the CPAs along. I have to point out as well, I have been working on sustainability directly for 9 years. And within the market for, accountants and auditors, I've seen a shift from overall just push back. We're not even gonna touch ESG to embracing it more.
Mm-hmm.
And from my viewpoint, accountants and auditors have been slow in coming around, but at the same time, it's welcome that they are in fact coming around and applying their particular expertise where needed to bring about the information that investors need to make better investment decisions.
Mm-hmm. It's great confirmation by you. Thank you very much for that. Appreciate it. Just to switch gears maybe a bit and talk a little bit about leadership, if that's okay with you, because you've had many opportunities, your military background, West Point, and just what you're doing now. I could probably have a whole nother show on that for sure, because there's probably a lot you can tell us and we can learn. But what's been your biggest leadership lesson, and what advice do you have for the listeners in leadership positions or looking to lead? What would you say, like the top 3 things that you've learned or that you would want to share?
So it's interesting. When we focus on leadership, I actually majored in leadership while at West Point. I recall well a study conducted on Civil War battles examining numerous factors, down to the physical education scores of the generals involved in a particular battle. What I found most interesting was the most significant factor in determining success in battle was whether the leader had seen the battlefield. I recognize that we're not going into battle, but the principle holds in this work. You cannot lead solely from a desk in the office. You must get out there and see the battlefield, step on the turf, engage all parties, keep lessons learned, and apply those lessons learned. It means attending conferences, engaging with policymakers and regulators, get up close and personal with what is happening on the cutting edge, develop a network and create convening power that can be drawn upon when needed. And so I think the most important thing is to actually get out there. And I think some people sometimes believe that, I'm not going to that conference, there's nothing that they can teach me there. Well, that's the perfect opportunity. You should be the trainer. You should go to the conference and actually provide your knowledge to others. And in the course of doing that, interestingly enough, I think your own knowledge becomes more crisp and better, especially with questions and being challenged, and you get to rethink what those particular items happen to be. The next thing I've learned, I think, is that whenever discussing issues with a group, you're talking to people that have different levels of knowledge, different levels of interest. And you have to decide in terms of what level you are going to speak to and what points you're going to, in fact, make. If you go too low, basically, you're rehashing information that everybody in the audience knows. If you go too high, you're above the understanding of people. So to capture the right points, I think it's a matter of having, one, an in-depth knowledge of what you're talking about, such that you can provide the right nuggets to a mass audience. And I think that's important. Finally, one must lead by example. I mean, if you're leading a group, chances are many of those people in the group will follow your behaviors. And that means whether it's good or bad, they're going to emulate those particular behaviors. And so in that light, you want to make certain that they're more good than bad behaviors.
Mm-hmm. That is great advice. Like I said, I could talk to you for a whole nother episode on that, but I really liked what you said, but you got to see the battlefield. You have to get out there and you really have to interact with individuals. And I think that's a call to action to everyone here, because sometimes we get too comfortable, especially during the last 2 years of just being in our own world, sitting there, but you just don't know what's happening, and you really have to talk to people out there. So I think that's great advice. And I think you're in Sacramento, aren't you?
Yes, I am.
I'll have to have lunch with you one day. I'll have to practice that and get out
I
there.
look forward to it.
That would be great. And I loved what you said too about just knowing the right nuggets, kind of doing your homework and making sure that you understand and always leading by example. Those are spectacular, really good information and takeaways for everyone on this call. So thank you for that. And then I guess another question would be for you as we round out the session here. I just want to make sure I ask this. So what is more challenging to you, managing the $500 billion portfolio for CalPERS or making it through, the military academy at West Point, which both are definitely significant accomplishments?
I love the question. So West Point was mentally, emotionally, and physically challenging. We were trained to do the harder right rather than the easier wrong. Assisting in managing a large portfolio is mentally and emotionally challenging. But there's no physical component as an additional stressor. Interestingly, though, in each case, the primary motivation is for the benefit of others. At West Point, we were trained knowing that we would one day risk our lives to promote our country's interests. At CalPERS, we manage money for the interests of beneficiaries. In both cases, there is a higher and honorable calling.
That's great. That answer was perfect. It's really well done. So my next question is a little bit of crystal balling. So seeing what you're seeing in the economy, hearing what you hear, what do you think is next, or what should we be focusing on? As we all have portfolios, what should be top of mind for us?
I think what's next is a little bit of uncertainty. And I say that I think we heard from Fed Chairman from Jackson Hole, and so basically people are prognosticating what will happen. And quite frankly, I do not know, but I do know that our mission is a long-term one that gets beyond where we currently happen to be. There are concerns all around. I mean, we see from both parties basically some fiscal challenges in that each party has attempted to give certain constituencies a lot of money. And that too has an impact on what the Fed must do with regard to monetary policy. But more importantly, these sorts of fiscal decisions can't continue. Mm-hmm. At some point, we have to get to back to normalcy. Mm-hmm. And when we do that, we get to focus on what we're primarily focused on, and that is to assist companies in being the best they can be, to focus, in fact, on the long term, to make sure that they're mindful of those three forms of capital: the financial, the physical, and the human capital. Mm-hmm. So I think in a nutshell, we keep our eye on the long term, but it's harder to answer given our current state in terms of what's going to happen with the fiscal and the monetary policy, all of which will impact the market.
I think that's great advice too. As CEOs, that's what we're looking at too, right? What is the long game? You have to make sure you're looking at that. And then it's all uncertainty. And you have to be looking at the kind of everything aligned with what you said, the financial piece, the social piece, the physical, the financial, physical, and the human, right? That's so important in everything we do. And before the pandemic, I think there wasn't as much focus on the human side, that social piece, which has come to light, and we're all going to be better for it in the long run. So
I think so too, and we're focused on that.
Well, thank you. I think we're ending with our time, but thank you so much for being here. Your 2 million members they're lucky to have you at the helm. They really are. And I look forward to having lunch with you one day, and then maybe at some point too, you can come back and share more on the leadership perspective, because you had some really great takeaways there.
So thank you so much for having me.
Rise and Stride is produced by the California Society of Certified Public Accountants. To learn more, visit calcpa.org.